Our team constantly gets questions like, why should I work with an investment specialist when I'm beginning my EB-5 investment process? Or, what can an investment specialist do that I can't do myself? These questions are totally valid, and if you're asking yourself these at the beginning of your EB-5 process, this video is for you. Hi, my name is Isabella Getchy, and I'm the Program Manager at the American Immigrant Investor Alliance. We are a 501c4 nonprofit based out of Washington, D.C., and we regularly conduct educational and advocacy campaigns for EB-5 investors from across the world. Today, we are so lucky to be joined by some of our vetted investment specialists who have a demonstrated track record of putting EB-5 investors first. If you've ever wondered what an investment specialist is, what they can do for your investment process, and why it is so critical to work with some of these professionals, you definitely should stay tuned for this video because they have lots of interesting tidbits to say. So with that, let's get started.
Given that the EB-5 process is so complex, you really do need the right people on your side to help you with your investment. And it's important to select someone that you know is trustworthy and does great work in selecting that investment. So I'm really happy to have our guests on with us. These are AIIA vetted investment specialists who do really great work and have great track record with the investors that they work with. So hi guys, I'm really excited to have you here. I'm here with Andrew Wall from Dynax Capital, Irina Rostova from EB-5 Support, Ashok Kumar from EB-5 Resources, and Brandon Meyer from EB-5 Choice. These private placement specialists we have today are strong investors first advocates and regularly demonstrate their passion for protecting their clients' interests. So again, I'm really happy to have you guys here. I'd love it if you guys could just take a second to tell us a little bit about yourselves.
So hi, I'm Andrew Wall from Dynax Capital. I got into the EB-5 world roughly 10 years ago. When I first started, I started working with an individual issuer on the project side, structuring the offerings, working with individual investors, immigration attorneys, and so on. And through the years, I ended up going off on my own and working in this brokerage with Dalmore, and I've been doing brokerage work for roughly 5 years now. My main focus are Latin clients, my family history being my mother being Colombian, speaking Spanish, and born and raised in South Florida. And if you can't speak Spanish there, you can't survive.
Hi, my name is Irina Rostova. I was a practicing immigration attorney for 10 years. I specialized in the EB-5 program. Over that period of time, I represented roughly 700 families from different areas. We have Asia, Latin America, Eastern Europe. So I was very involved for many years in the program as an immigration attorney. And I felt like there was a big need to help investors with the project selection. Unfortunately, there were just very, very few professionals who offered those services. So eventually I became licensed, and for a few years, I represented my own clients that I had in my firm. And now I retired from practicing law, and I just represent investors as a broker. And now I actually created a training program for other immigration attorneys. So I train immigration attorneys on the EB-5 program and represent investors in the project selection.
How about you, Ashok?
Hi, I'm Ashok. I'm an EB-5 investor myself, having completed the process last year. But I've been helping EB-5 investors go through the program and the process since 2019. And I became a licensed BD in 2020 and spoken with many investors. I understand their issues and concerns with the complicated process. So I kind of help them out, even if they're not my clients. But all of my clients that I represented, they've been very happy with me, with the project that I show them, and I guide them through the process.
Fantastic. And last but not least, Brandon.
Hello, everyone. My name is Brandon Meyer. I'm the founder of EB-5 Choice. I decided to get into the broker-dealer side because I was giving Ashok too many referrals in the past. So I've been involved in EB-5 since 1998. So I've seen pretty much, except for the 1990 to 1998 cycle, pretty much every life cycle of the EB-5 industry, the rise, the fall, the subsequent fall again, and the new rise. And like Irina, I saw this as an unmet need in the marketplace investors can either try to do all this project due diligence on their own, which some of course are capable, but many it's just too daunting. So I decided to get into this to help address this unmet need. Unlike Irina, I have not retired from the law firm side. I still have Meyer Law Group up and running, and this is a new and exciting initiative for me personally, and glad to be here with all of you today.
Amazing. Well, great. Okay, well, let's just hop right into it. So you're hearing a lot of terms for what your role is in the EB-5 process. We've said investment specialist. Sometimes you hear EB-5 investment broker, private placement specialist, registered representative of a broker dealer. Can you guys tell us a little bit about what all of those things mean? What do you guys do in the EB-5 process?
Sure. So I think all of those things, all of those names, they mean the same thing. They're just different names for the same profession. But what that means is we are FINRA licensed securities brokers. That means we're allowed to work with investors and guide them through the process of project selection. What we actually do is we run our own due diligence on all the projects that are presented to the investors. And that's our job. Look at different projects, do due diligence on projects, and offer a choice to the investors. We do not make the choice for them. So it's different from being, for example, a financial advisor where you can guide and kind of help your client choose. We don't select for our clients. We perform due diligence and give clients a choice.
Yeah, and with one distinction, our respective organizations, be it EB-5 Choice, EB-5 Resources, EB-5 Attorney Support, Dynex, those organizations themselves are not broker dealers. That's a very specific licensing process that an institution has to go through to become a broker dealer. So all of our organizations affiliate with a licensed broker dealer, and given that EB-5 are considered securities offerings, those broker dealer organizations are the ones that actually process the EB-5 investment, as it were.
Yeah, fantastic. It's really great to, have an advisor who's on your side, knows the ins and outs of what making an investment means, and especially in the context of EB-5. So it's great that, there's a dedicated group of professionals who can help an EB-5 investor select a project, know what it means to make an EB-5 investment, and also look at the project specs before throwing in that huge sum of capital into an investment project. So when an EB-5 investor is thinking about making this investment, when should they be coming to you? Should it be a long time before they even start thinking about EB-5, or is it more close to right when they invest? Tell me a little bit about that.
I actually would love to hear Ashok's story, maybe like a firsthand experience. That'd be nice.
So when I started looking at EB-5, we wanted to move to the US, and I was living in Dubai. So at the time, I almost had all my money. I didn't have the full 500,000, but I figured I need to first learn about the process, what EB-5 is about, and what are all the steps involved. So while I was putting my money together, I started looking at different projects and different EB-5 laws and rules and regulations, speaking with a couple of attorneys, in fact. And that's how I got started. And I would suggest the same. If you still don't have the money, but you're very sure that you want to do the EB-5 and you want to know a little more about it, I think that's the right time to get in touch with an investment specialist like one of us and get to know the whole process and understand what it requires to actually make an EB-5 investment and how to go through the process.
I think the same thing, to really begin early on. At times, we have individuals who come to us prior to speaking to immigration attorneys. And, we give them a little bit of consultation advice that they may save themselves, a couple dollars here and there, just understanding the program, answering some of the questions, and really figuring out if this is a program that not only works for them, but that they're approvable potentially on a high level. When we get to that point, then we can go and say, hey, yeah, this is the program for you. We think that your background, where your capital is coming from generally is approvable. And we need to have that a little bit more confirmed from the immigration attorney. Here's a few immigration attorneys that we think you would fit well with you based on their background, based on your background. language, time zone, whatever it may be, and we'll go and we'll introduce them to a few attorneys, and then from there we kind of move on. But I think it's important to meet with us first to see maybe this is the right program for you. And I think Irina has experienced this a lot. Not all attorneys understand how EB-5 works. So you may go to an attorney that, maybe EB-5 is the right program for you, but they're not very well versed in it. So they may not tell you that that's the program to go to. And vice versa, right? We're not versed in all immigration aspects either. So it's nice for them to kind of bounce ideas off the attorneys and have that discussion, about your specific case to verify from multiple aspects.
Absolutely. No, thank you, Andrew, for bringing this point up. It's always good for investors to speak to an investment broker at the same time that they're doing the initial consultations with their attorneys, because it gives them more clarity and understanding of what will be required from them, because many attorneys, they have a limited understanding of the program, or maybe a limited understanding of how the project selection process happens. So you want to make sure the attorney is advising them on the immigration process, and we're there to kind of fill in the information about the timing in the actual process of selecting and going into a project. Because there's also, sometimes some projects fill up very quickly, so you want to start planning a little bit in advance, a few months before you're ready to invest, to make sure you secure your spot.
Yeah, absolutely. And I would take a slightly different take. I think part of the issue with EB-5, and you see this over and over and over and over again, is some attorneys are honest enough with themselves to realize that they don't, if someone contacts them about EB-5, that number one, they don't know much about how it works because they do H-1Bs all day. Or some of them are honest enough with themselves and to admit that they don't understand project selection and due diligence. My feeling is that a lot of attorneys, because we spend all this time and money and brain power going to law school and passing bar exams, that a lot of us think we are experts in everything. So they start counseling people on EB-5 when the legal process, when they don't understand anything about it. And then from the client's perspective, they say, okay, well, you're a legal expert. Well, you tell me about which projects I should invest in, or tell me about this project or that project. And either because they want to be helpful, or they don't understand that these are regulated securities, they start saying, wait a minute, I saw this particular project at AIIA National, and those people were really nice. So project B must be the one for you. And in our litigation practice, or as I call it, our EB-5 disaster recovery unit, you see a lot of this 5, 7, 9 years down the line where an attorney meant well, but they were really in over their head on both the legal process and the project selection stuff. And now, the investors not only facing problems with their immigration process, but they're also facing issues with whether or not they'll ever get their money back.
Thank you, Brandon. Yeah, I think that brings up a very good point, is that we as brokers, our fiduciary duty lies to the investors. So when we represent investors, we are supposed to present the most objective information, and oftentimes, depending on who you're asking someone, if they have alternative motives, for example, an employer who is trying to keep an employee on an H-1 visa, they may provide just simply either inadequate or incorrect information about the program.
Yeah, I like the way that you guys frame this. Like, attorneys and investment specialists kind of work as two halves of a whole. When you're looking at compliance, when you're looking at admissibility, they're almost like a second check to like double, triple make sure that EB-5 is for you, and that everything is sound when you are sending in like a whole ton of cash into an investment project that you may or may not even be able to visit or something like that.
We'd like to support them in being the superhero that they want to be for their client, right? We're just kind of like another tool on their belt, and we're here to support every party and do it objectively, like Irina was saying.
Right. Exactly.
Sorry, but those are two very distinct, different roles. As an immigration attorney, your primary responsibility is to guide the client through the immigration process and figuring out the lawful source of funds documents. And then as an investment broker, your primary goal is to guide the client through the project selection process and the due diligence. And they don't really overlap. They're very distinct responsibilities, because immigration attorneys, they can provide very limited advice maybe on who is a reputable regional center, but they cannot do their own due diligence on the projects. So you put it very well together. It's two halves of a whole. You need both professionals in order to get kind of a very complete picture.
Yeah, for sure. And that sort of brings me to my next question. So, you know, we often have investors asking, like, why should I use an investment specialist? Can't I do the due diligence myself? And you mentioned that the attorneys can't do the due diligence. So what's the merit to using an investment specialist over trying to find this data on your own?
Well, first and foremost, cost. I mean, an investor could do due diligence on, say, 10 different projects. If it's a superbly competent investor that speaks perfect English, understands US investment laws and regulations, and they spend their own time doing due diligence on 10 projects, it's going to be hundreds of hours. Most foreign investors are not in that position. So for a foreign investor who may have a limited understanding of the language and very limited understanding of the legalities of investing in the US, they would need to hire a professional. Costs on running due diligence on about one project is roughly $20,000 to $25,000. So if you're running due diligence on 10 projects, that's $250,000. When you're utilizing an investment broker, because we actually get compensated from the project once an investor invests, it's just a very cost-efficient method for our clients to look at many projects that have had the due diligence done for them. So instead of them paying, $250,000 to run due diligence on 10 projects, they come to us. We have already pre-selected the projects we're going to do due diligence on, ran it, and give them the options.
No, absolutely. Investors who try to do their own due diligence, even those are capable. I spoke to someone last week who is president of a very, very large bank. So you assume that individual would be very, very sophisticated, and this individual is. He's stuck in a project that will never, ever give him his money back. And he tried to do his own due diligence. And I think admittedly, he would admit that he failed, even though, yes, he runs a very, very large bank. And that's because, the EB-5 industry is a little bit different in many ways than investing in a mutual fund or a stock portfolio or whatever. The way I always say it is that, EB-5 industry in some ways is a mature industry, but, there's no bonus points for creativity. The only thing there is avoidable headaches. So when people try to do their own due diligence, they look at this stuff. Oh, look at this garbage, quarter point a year. Wow, look at this. These guys are offering 5% a year. This is awesome. I'm going to go for that. I'm going to stay, and not realizing that, well, there's probably a reason why, the purple unicorn farm in Kansas is offering, 10% a year return. And these other people that have been in the business for 20 years plus are offering half a point. And it requires professionals such as us to advise the client that there's a reason why one's offering that and these other people are offering something in a completely different ballpark. And people who do their own due diligence in this field don't necessarily appreciate that at the beginning. They do 5 to 10 years from now when they're calling law firms and saying, hey, I have this issue with my green card and my money. Can you help? All of us are trying to avoid that unfortunate scenario for our clients.
I agree with Brandon. Yeah, there are definitely some situations where the investor is over his head. Seen some investors talk about not getting their money back, and then when they look at the PPM, read through the PPM, they didn't even think of asking certain questions. And even now, when I talk to would-be investors, they've done their due diligence for a month or two, but they don't even know that some of the aspects of the PPM, how it's going to affect them 5 years down the lane. And as professionals, having been in the industry for a long time, we kind of know where to look at and what to look out for. And that's where I think we make a big difference.
I agree. And a lot of the questions that should be asked, you don't know if you need to ask them if this is new to you, right? This is something that we're learning over time and all of our time and experience in these different individual situations that occur. That's when we're figuring out what questions really should be asked. And that's not something necessarily you can Google. Sometimes there's a benefit that all of us are in this webinar right now, talking to each other and sharing the experiences we have, because that's information we can gather and then therefore assist a lot of our clients. The clients may be gathering information on chat groups and things like that from perspectives of who knows who they are, right? They're just names on a chat group, and it could not be true information. It could be a little bit of misinformation, but when you're coming here to the source from licensed professionals, there's a lot of value in that.
No, absolutely. And, to the extent that we have the potential market appreciate what it is we do is beneficial as well. In some circles, I had an episode recently where potential client came to me and was like, hey, help me with project due diligence. Well, yeah, I can now, because now I have my licenses and this is how this would work. And then the person asked, well, how do you get compensated and how much? As a disclosure item, I have to say that. I have to tell people. And the potential client became very, very, very weird and uncomfortable with that. And so they decided to take their investment advice from their work colleague off of LinkedIn. And just because, Brandon might get paid. Well, again, this isn't a free service, and good luck for taking, your investment advice off a fellow EB-5 investor who, by the way, doesn't have any securities licenses, and who, by the way, may be getting something from the project for all the time they spend on LinkedIn. Good luck. We can't help everyone, but if we can help enough people, then the downstream impact is, to the investor community is a good thing, and that has the impact of raising the overall reputation of the EB-5 industry, which I think is something that we should all want.
So when an investor, is often asking us, why should I use a broker dealer instead of doing my own due diligence? I usually give them the answer of, when you have a medical need, are you going to do your own research online and try to diagnose and treat yourself, or are you going to use a medical professional? Now, is there a chance you will do an amazing job diagnosing yourself on WebMD or through Google, and you will treat yourself? Sure, there is a chance. But if it's a serious matter, you want somebody who has been trained for years, who has years of experience, and has a wealth of knowledge that may not be available online. And that's what we do here as broker dealers. Our licensing process is quite extensive. We're also held to ethical standards that require us to constantly review projects, do due diligence on the projects, and to relay information in a very specific way to the investors, where they're getting a complete picture. And we have access to a lot of information that is not available in the public domain. For example, understanding the legal teams that work for the regional center, whether or not they're taking certain risks. Then we know the history of these regional centers. What prior projects have failed? Where were these issues? That information you will often not find in public domain if there were lawsuits or losses on prior projects. So, for investors, of course, they can do their own due diligence, and I feel like investors should be doing general research, but that's the main difference. If something is really important, you're placing more than $800,000 in investment on the line, do you really want to rely on your limited Google search, or do you want to use a professional?
Right. And one other thing is that you guys have access to information about the project that aren't necessarily in the public domain, right? Like, if an investor were to do the due diligence themselves, they couldn't find half the data that you guys could.
Well, these are private placements. So information about the projects and the details of the projects are not going to be in the public domain. They have to be requested. But of course, there's just a wealth of knowledge that comes from lifetime of experience, knowing which companies have had issues with certain contractual provisions before, knowing how these companies have addressed these issues. Did they let their investors take the fall? Did they step in and try to utilize whatever powers they had to try to minimize a potential risk or a potential loss? that information is not going to be in the public domain. Just being in the industry for years and observing different players, knowing different lawsuits that have taken places and who has done what. There's also information not in the public domain. Like, I know the legal teams that handle a lot of the work for these regional centers. I see them all the time, as many of us do at conferences. We talk to them. We dive deep into their outlooks on issues that have been, say, undetermined by USCIS. So if I know that they have a very good legal team, a conservative legal team, I know that it gives the clients the best chance at a green card approval. And then there are other projects that will take risks. So they want to, for example, create a contract, but one of the provisions is questionable. It hasn't been approved before by USCIS. If their attorneys are willing to take the risk and move forward with it without knowing if it will be approved or not, that's an issue. And that is just not information that's available in the public domain.
Yeah, thanks, Irina. And I think, you mentioned some things that lead into my next question, which is, what kind of due diligence do you guys conduct on these projects? So you mentioned stuff like track record of the regional center, knowing people who work with them and their track records as well. You see the performance that regional centers have with their projects failing, succeeding. What other specific things do you look for when you are looking for or conducting due diligence on a project and looking for projects to recommend?
The type of due diligence that we do involves, for example, independent bad actors checks. So we look at the parties and the principals involved in the project, not just the regional center principals, but who is involved from the developer side, who has a lot of influence in the project and how the project will be developed. We run a bad actors check just to make sure this person has not been previously sued by the SEC for violations. So that's an independent check that an investor will likely not be able to do on their own. We look at a lot of common sense things. So the business plan, the viability of the business plan, contractual provisions, because there's certain things that have already been accepted as a standard in the EB-5 industry. And we're looking to make sure that the contracts don't try too many new kind of options or schemes. I'll give you an example. It is typical for a developer to put in some equity in a project, then EB-5 investors can issue a loan, and then a bank can provide a construction loan. So you have three main parties: a developer, EB-5 investors, and a bank. The bank gets repaid first, EB-5 investors get repaid second, the developer gets repaid last. So the developer equity matters very much. If they put in 20%, that's their skin in the game. Some projects can allow the developer to repay themselves part of that equity early with the money that's coming in from EB-5 investors or with the profits of the project. That's an issue. So when an investor is looking at a project and they're thinking, oh, the developer put up 20%, so that's good, that's my security. If the building gets sold for 20% less, I will still get the return of my money. But there could be a hidden provision in a contract that says the developer gets 10 of that million back or 15 of that million back. So that reduces your equity involvement. It's things like that that our due diligence team will look at to make sure the contracts are more or less standard from what we have found to be kind of the less risky options. And I'll let the other parties kind of jump in and talk about some of the other elements we look at.
I think you're guiding us right into essentially two of the trigger words, the exit strategies and the redeployment. And in reality, part of our job is to go in there, understand the legalese of the contract, and then regurgitate it in a way that's more palatable to our potential investors, right? Something that is just plain English as much as we can so that they understand the true redeployment structure if you were to get to that point. And then also the exit strategy, just like you were mentioning. Part of what the example you're saying was very difficult for a potential investor to understand in legalese. But the way you stated it, it's perfect for them to be able to now understand their potential risk factors in that aspect. So I think that's part of the importance of us, is to make things more layman's terms to an extent.
And just to focus on the due diligence part, The project does generate a lot of documents that investors kind of get overwhelmed with. One of the things I always look at is a third-party market study done by an independent agency. I go through it, I look through it, and for example, recently I saw a project. I think the cost was 45 million, and the stabilized exit value was 48 million. So barely it was $3 million difference. So things like that. I mean, we kind of point out to the investors and let them know that this might be a potential red flag.
I think one of the benefits that we bring to the table potentially is, like you said, once the investor invests with that project, sometimes maybe they're a little less likely to answer right away. But when we're calling them, they're like, Brandon, you're going to Vegas, you might have some potential prospects for our project. It would be perfect if I answer all your emails within 1 hour, So there's a little bit of value with the strength in numbers that we kind of bring to the table that maybe as a potential solo investor that you don't have, right? So I think that's important to take into account.
I think that's a real good point. I would like to use some examples on that. When investors are going into a project by themselves, their negotiating power is quite low. It's one investor. The projects are usually good projects. They do well in the market, so they're not hunting after each investor. And once the investor has invested, the project doesn't have as many reasons to make special accommodations for certain investors. And what I have seen in my practice, because as an immigration attorney, I had a large pool of investors that at the time I would directly introduce to regional centers. As a result of my relationship and these regional centers knowing that, I bring quality investors, these, and there's a volume, they made a few exceptions for my investors that they didn't have to make. So I had a couple of investors who wanted to exit out early, and the regional center took the time and tried to find within their pool of prospective new incoming investors who could replace them. That's absolutely not something a regional center had to do, but they went kind of above and beyond because it was my relationship. And so as brokers, we do occasionally give this bargaining power. The regional centers know that they're going to be working with us for many years. And if they can make extra accommodations, they may just take out the time out of their day and help out an investor where otherwise they wouldn't have to.
I think the most fun due diligence that we left out is our site visits. So, we should be all making these site visits on an annual basis. Obviously, we're talking to the regional centers, but some of the sites are really interesting to go visit. So not only are we doing it for our job, but I think we enjoy doing it in general.
Sure.
Well, that is the fun part of what we do. It's true. I agree that site visits are important, and that goes to the cost of if an investor was doing the due diligence themselves. I think there's more to just visiting a site. I think because most of us have lived and traveled extensively throughout the United States, we often have insight to the project locations and what's going on there that an investor may not have. And that insight can be something that will tell us, hey, this is a little bit riskier because we know there's potential kind of issues in that area, or vice versa. If we have heard of an area getting developed, then it gives us a better understanding of that project. And site visits are important to grasp a general understanding of where projects are going. I agree. And also seeing how regional centers have done. I think I speak for everyone here. We often visit finished projects because that also gives us a really good idea of the quality, the follow-up, specific developers. Like if we know that developer is going to do more projects with a particular regional center, we want to visit their past projects to see how they have implemented their business plan.
You have some potential investors, especially those who are in the US on H-1Bs, and they have extended waits in their EB-2, EB-3 processes, look and say, okay, well, I want it done fast, and I want it done, and I want to grab the set aside. So I only want to look at rural projects because, the law says that my 526 is going to be adjudicated in 6 months, and I'm going to have this priority visa category as well. And so that may not be the case. Selecting a project on that basis and that basis alone, that you might get faster processing and you might get visa preference. That may not be the best approach. I mean, you know, there was a project a few years ago, I won't name it, but you know, it's basically its only selling point was we have an expedite from USCIS. So you'll get you'll get your 526 approved faster and you'll get your green card faster. That was pretty much true for the most part. Now, I told people, and I was like, look, you know, I know a lot about this particular industry because my children are involved in it. Like, your chances of, you know, my unofficial opinion of your chances of getting your money back from this project are about 0. And so I had these guys tell me, well, I don't care about that. I don't care. I just want my green card fast. And so I don't care if I lose all my money. I'm like, all right, here's what you do. Call me back in 2024, 2025, when it's time to get your money back. And let me know how happy you are when you get a check for the project for about $3.50. You are going to be extremely livid, extremely upset, because guess what? You just lost all of your life savings in the process. So sometimes what we have to do in this as immigration attorneys, and I think as investment advisors as well, is basically talk people off the ledge, talk them out of making bad decisions that, you know, seemingly are good on the surface, i.e. getting faster processing times, but may or may not actually be to their benefit in the long term. And right now, since there is no retrogression for any country under the Reform and Integrity Act Visa Bulletin, you know, this could change, but for the time being, again, pick the best project, not whether or not it has a rural or a high unemployment designation, because right now that makes no difference.
Right, that's a really good point. And I feel like we've heard from so many investors who are considering the set-asides seriously or reinvesting even, which is like mind-blowing because of the current status on the Visa Bulletin. These are really great points, right? Like, there's so much for an investor to be thinking about if they were to conduct the due diligence on their own. And there's so many things that you guys are licensed and, you know, trained to look at and look for, you know, all the old tricks. And you've mentioned a couple times, I think AIIA brought up that you guys are compensated by regional centers, but Brandon was talking about how this is a free service for investors. So can you guys talk a little bit about the balance between who you're compensated by, how you're compensated, and who you are obligated to represent when you are promoting a project to an investor?
So I'll start off by saying that our service is free to the investor. We are compensated by the regional center, and but we are fiduciary to the investor. We don't represent the regional center. We show a few projects to the investor. We put forward our due diligence and let the investor pick and choose the project that he or she would like.
So we are compensated by the project. That is absolutely true, which is quite convenient because our service doesn't cost anything to the investor. If they like a project from the options that we present to them, they can proceed with that project. If they don't like our services, or for some reason they couldn't find the project that they feel comfortable with out of the options we gave them, they can continue their own search and invest into something else. So it's a no cost and a lot of benefit to the investor. Also, it should be mentioned that when projects do offer discounts, we as brokers are able to offer the same discounts. So if there's a discount potential in any fees, that kind of passes through to the investor through the brokers as well. The way we look at projects all the time, we tend to work with the most reputable regional centers, the most reputable projects. And because they are competing in the same EB-5 market, they tend to offer very, very similar compensation models. That's why the difference is really not very much to sway a broker's decision, even if that broker was swayed by that. The compensation models of the projects we take on tends to be very similar. There are some exceptions. Occasionally, there's a project that for whatever reason, they don't have the same profit margins, but it maybe is a very appealing project for the investor. And sometimes we will onboard that because we do want our investors to receive whatever benefit they can. So if it's a unique project, it can derive a benefit to the investor, we'll onboard it even if the compensation model is less. I think we're all in this game for a long term. And we understand that if you are short-sighted, if you're trying to sway your clients into a project that pays a little bit more commission, it's just something that becomes very obvious over the next few years. And it certainly doesn't win in your reputation. And I think Brendan and I also faced the same thing when we're practicing attorneys. You know, if you're charging your client more than other attorneys are charging and you're providing lesser value, that will reflect on your reputation in the industry and people will know. So I think that there are a couple of things. Look for brokers that are reputable, and just do kind of look at the projects that are being offered to you, because visually you can see and kind of compare, and you'll be able to tell whether or not they're good, solid projects or they're slightly inferior.
No, absolutely. And that's a kind of a risk factor too. In the same way, if like you have, say, a group of well-established regional centers offering their investors basically a homogenized product, half a point a year, whatever it is, same or similar repayment terms. And if some group comes in, is offering 8% returns and all these other things, it's the same concept on the broker dealer side. If you have your basket of regional centers and projects offering us relatively the same compensation terms, and then some other group comes in and says, oh no, we're going to offer something that's significantly higher, then that should be a risk factor. That should be a red flag as well to us, because it's just not, will some out there take that bait? Absolutely. But again, it comes down to that fiduciary duty, because if an investor finds out that you put them in a project because they were offering 2x or some 1.5x over everyone else that you were in your basket, and that project fails, they are going to remember that, and they are going to name you and your brokerage and everyone else in a lawsuit, and that becomes very difficult to defend. At a minimum, it looks bad if you put someone on a project on that basis, or proceed to put people in that project on that basis. So it's just best to be avoided.
I also have a personal story that when I was an immigration attorney, one of the first licensed brokers in our industry was very active, kind of trying to get referrals from immigration attorneys. And I started sending him a few of my clients, hoping that they were going to get the benefit of the services. And a few of these clients came back and told me he didn't mention any of the big regional center projects that you have told us about. The projects that are being showed to us seem to clearly pay more commission than other projects that are better. It was obvious to the investors. So from that point on, I wasn't sending referrals to that broker anymore. He's not active. And that was one of the main reasons also I decided I wanted to get licensed myself, because I was very frustrated by the approach, that someone would take kind of an unethical approach about it. But I think it's something you can see through.
So when we're talking about you guys being compensated by the regional center, that probably comes a little bit from what the investor pays in terms of admin fees to the regional center, correct? So does the admin fee change whether you use a broker dealer or not? And how do those fees contribute to your compensation?
So that's an excellent question. The offering documents are set, and they're the same for all the investors when the project goes to market. So whether the investor uses a broker, a foreign agent, or goes to the regional center directly, they're going to get the exact same annual return. That's never going to change. And the administrative fee is usually preset. However, that part is negotiable with the regional center. Some regional centers allow to reduce the administrative fee, but it really depends on how the project is doing. Is the project selling out, or does the project want more investors? If a regional center allows to make reductions in the administrative fee, the broker is able to offer that reduction to the investors. So sometimes we as brokers can try to negotiate that on behalf of our investors as well. So, but no investor is ever getting charged extra. So whatever the standard administrative fee and the standard rate of return, that's standard in the documents. There's no other set of documents for investors that are using a broker where an investor is paying more for the use of the broker.
As we know, EB-5 is an expensive process. You have the $800,000 investment, then you have the administrative fee, subscription fee, whatever the project calls it. Then you have to pay attorneys and, USCIS, let's not forget US immigration, they want a substantial amount of money for no work at all that they do, really. And so when you start adding this up, it becomes, the $800,000 investment, suddenly becomes a 900,000 plus or minus more expenditure when all is said and done. And so justifiably, investors are looking for where they can shave costs out of this process. And, in some ways, this is a very expensive process for our broker dealers. To go do site visits is not cheap. To have our due diligence teams prepare due diligence reports, it's not cheap. This is not a cost-free endeavor on the back end for our respective broker dealer organizations. So, while it makes sense to try to, look for areas to cut costs, EB-5, if EB-5 is done right, there's really little to no scope for doing that.
Well, I think that also brings it to the point of when they're selecting projects, some projects have lower administrative fees. That should be a very small point of consideration of when you're picking projects.
Mhm.
I've had investors who would tell me, well, I heard of this one project and they're reducing their administrative fee to 30,000. I look at the project, it's a very risky project. Why would you want to save, 30,000 on an administrative fee when you're risking your entire 800,000? So, anytime you're saving costs, look at what you're actually saving on, make sure that it's not an inferior product. If it's an attorney, make sure that attorney is just as experienced. If it's a regional center, make sure the project itself is just as valuable. You'll find that most experienced professionals, there's a reason why they charge what they charge is because they do more work. I think on the foreign brokers, there are a few issues that could be well deserved why some people tend to stay away from foreign brokers. Number one, depending on the country where the broker is located, there are no licensing requirements. So literally anyone can start claiming that they're an EB-5 expert. They didn't have to obtain a license. They're not under any fiduciary obligations, and they're not under the SEC jurisdiction. So there's no punishment to them of any kind, if they're doing something wrong or unethical. So that's a first issue, and that's a first major difference between generally kind of the foreign agent and a licensed US securities broker. Our licenses, they require a lot of work. We're under constant review, and there are serious consequences if we break any rules in terms of information disclosure. So we're held to a different standard, we're supervised, and there are consequences if we do something that's not kosher. And of course, the fee disclosures are helping. I think for investors, it helps them to understand, and one of the things that I mentioned a lot to my investors, I'm like, the fees are what they are. They're already built into the project budget. So whether you go through a broker or you don't go through a broker, your compensation so your percentage in the project is not going to change whether you used a broker or not. If you're getting paid 0.5%, you're getting paid 0.5%. The projects have to structure the compensation model that's the same for every single investor. So that's why they build in, brokers and agents fees within them. Of course, there's some negotiating going on certain fees, but like I said before, if those reductions can be made directly for the investor, we can pass them on as brokers as well.
And I kind of want to jump back to the reputation of a broker in other countries. Sometimes there's a negative rep for agents or brokers in these other countries. And I think that's a lot of it's because there's no transparency in the fees that are going to be paid prior to moving forward. And I think here with the new RIA, that transparency is there right up front. If they were to ask us, we're telling them right away what our comp is for each individual project. So they understand that there's not a potential bias between one or the other. And they generally are not too many standard deviations from one to the other. But I think it's interesting to know the exact numbers when they come to the table. And obviously, we're all happy to do that.
I've spent way too much time in my life with overseas brokers. I've probably keep everyone here for about a couple days talking about various stories about how how much of a cesspool that whole area is. I think Irina said it nicely. I'll just say two anecdotes to tell us kind of what the overseas market is and how, if the cost is the same, how working with licensed professionals in the US may be a better option. So I had an incident six or 7 years ago where I filed a 526 for a project. I don't know what happened, but for some reason, USCIS approved the 526 in 3 weeks without an RFE, which, who knows why it happened, how it happened, it just happens. Word spread through Vietnam very, very quickly how, Brandon got approval in 3 weeks with this particular project. So all the agents suddenly wanted to go with this project. And I told them all, this is not going to happen ever again. Do not tell your clients to invest in this particular project under the expectation that they themselves are going to get a 526 approved in 3 weeks. Oh, well, then if we tell them that, then they're not going to go with us. Well, then, but if you do tell them that, then they're going to be very upset. So suddenly all these agents in Vietnam started piling into this particular project. Fast forward. Let me look at an email here from the agent. Dear Brandon, why can't my client get their money back? Well, because you didn't read the PPM. If you spent 5 seconds reading the PPM, you said there's zero liquidity in this particular project. That's why. So number one, the agents will always take the short-sighted approach to make the sale, which I think agree the four of us on here would never do. Example two, there was a very, very large group in the US. I think they're out of EB-5 now, but that was their whole thing was they're going to go over, project A is paying you X. Well, we're going to pay you 3X. So then all the agents piled in. And now that was great until that particular project, from what I've been told, allegedly stopped paying everyone, citing various reasons. So this one particular agency overseas is very large, came to me and said, Brandon, we learned our lesson. We got burned really bad. All of our clients hate us, but we're going to do it differently this time. We're going to different projects, different attorneys, different everyone. Okay, great. So I introduced them to a particular project. So the project guy calls me up and is like, you can't believe the meeting I just had with these people. Okay, well what do they want? They wanted, 2X upfront of base, we were offering X, they wanted 2X, we were offering Y interest, they wanted 3Y, and basically way over market. So basically the short end, the conclusion of that is that even though that group was burned and will be spending the next 15 years digging themselves out of the hole they created, fundamentally, they learned absolutely nothing from their experience because they're still going around and expecting to get compensated the way that they were, back in 2016, 2017. And so that's the overseas market. And, it's hard to kind of break that stranglehold a little bit in EB-5, but there are savvy enough people out there to realize that. And it's usually because their friends went through one of those, got burned, and told them to avoid the overseas agents and deal with professionals in the US. Again, would it be nice if the four of us and our other colleagues in the space had 100% of this market? Absolutely. But any bit we can to kind of move the market in the direction of using licensed professionals, again, improves the overall EB-5 experience among the investors And you can avoid these particular scenarios of showing up investor meetings overseas and having the investors looking to lynch whoever has the misfortune of showing up. Because, yeah, it's all about the short-term gain overseas. Zero understanding of what they're selling, zero understanding about anything. It's just how much can I make and how quickly can I get paid?
Just saying that doesn't have the value that it does when you can kind of make an actual story come to life the way you did. And that goes back to the fact that you're not going to be able to Google these things. These are experiences that we all have as a group, and that adds value into making the individual petitioner's decision when he's selecting projects. So I appreciate the story. I mean, you just gave us some more insight for, our future recommendations.
So we've talked a little bit about what you guys do, what value you bring to the investor as a whole. We've talked about, what licensing is required from you guys and, where you sort of fit into the EB-5 process. But let's talk a little bit about how an investor would go about selecting a private placement consultant to help them out with picking a project. What should investors be looking for? Are there specific traits that they should be looking for? Is it more based on comfort? Tell me a little bit about that.
Well, I guess one of the main reasons investors look to me is because I'm an EB-5 investor myself. And having gone through the process, I kind of relate to their experience that they are going to go through now. And also I work with Indians a lot because I'm from India and there's some kinship there. But that's not to say that I don't work with other nationalities. I work with South Africans and Canadians also.
For some investors, language has become important. So I speak Russian. So by default, I have a lot of Eastern European clients. Andrew speaks Spanish. For some investors, a language is important, but I didn't find it to be a barrier. I'm in South Florida, so I also have a lot of clients from Latin America. As long as I have Spanish-speaking staff that can assist them, we work with that. And obviously Asian clients. So comfort level is important. You also want to look at your broker style, because their style of explaining information, summarizing, and making a more complicated idea simpler, that becomes very important.
I think language sometimes is a barrier, but not always. We've worked with clients from roughly like 27 countries the last we counted. But the other thing is, you're getting married to this person for 7 years, whatever it may be. You want to be able to be comfortable with that person, someone that you get along with, that you can call. I'm sure all of us have gone to meet with our clients at some point, something that is not discussing their potential investments. Right. I have a client in South Florida that likes to call me for whatever reason for coffee, and then it always becomes language practice, and he's practicing English with me. So things like that, I think it's funny. I enjoy it and I enjoy their time, but it's like a relationship, I think, is one of the most important aspects of it. Another thing to be said is some of the brokerages offer products that others don't. So if you're looking for specific products, maybe you talk to multiple brokerage houses and see what they're offering to find something that best fits your need and your background. So that's important too.
Mm-hmm. I was going to say background experience also sometimes plays a role. Like, for example, Ashok is a former investor. Some investors like that he went through that experience himself. Andrew worked for an issuer, so they like the notion that he was like on the other side of the project. Brendan and I are both very experienced immigration attorneys. So I have seen clients that choose me as a broker because they also want a second opinion on what their immigration attorney is going to do. They want kind of, once the files are being done, they want maybe a suggestion or a second opinion on the source of funds. So different backgrounds for your broker also can be helpful depending on what it is that you're looking for.
I just want to jump back to something you guys were talking about working with a broker being like a very long process. And, that's sort of a compliance mechanism, both on the regional center side and the investor side, that makes sure that you guys are doing your best job, working in the best interests of everyone. So let's talk a little bit about the process of working with a broker dealer. I'd love to hear from your perspectives of working from investors. Walk me step by step through how it goes when an investor comes to you. And also, I'd love to know if the relationship just ends once the investment's been made.
the investor side of working with a broker dealer, generally in the processes that we have improved, and then I'll let other speakers kind of jump into more detail. I think one of the things that I intentionally try to do is to make the work that I do with the investors as easy and as quick as possible. EB-5 is already going to require a lot of the time from the investors in sourcing their own documents, and you cannot avoid that. So there's going to be a lot of work on the investor side with their immigration attorneys. So I wanted to make sure that my job as a brokerage, I was simplifying the job of the investor. So what we do is we do most of the work before the investor ever comes to us. We are constantly looking at projects. We're constantly visiting projects. We're running due diligence on them. We hand select the ones that we think are best, complete the due diligence, and we created a very simple online portal that we grant our investors access to. So from the time the investor comes to us and we do the initial consultation, we walk them through the process. Once we start representing them, we literally grant them access to an online folder where they can see all the pre-qualified projects. This really simplifies their process because they're granted choices that have already been pre-reviewed by us. It usually takes, depending on the investor, only a few hours to dive in deeper to look at these projects. We get on the call with them. We do a comparison. We answer their questions. If they want to go and discuss documents, we do. And then they make a decision. So the process of working with a broker can only be a few hours because we as brokers have already done hundreds of hours and just kind of present. It's like coming to the restaurant, opening the menu and picking what you want to eat. The chefs and all the assistants have been slaving away all day, and your food comes out 30 minutes later, perfect, hot, and ready to eat. So that's kind of the process. Now, once the investor has invested, there are additional services that they may need in the future, whether it's communicating with the regional center or not. Sometimes there are going to be tax questions that will arise. We tend to let investors know, our main job is done. However, email us in the future as the needs arise, and we will make sure we find you the right professional. If it's a question for a CPA or another attorney that arises outside of your investment. And that's why I think when we talk about the long-term relationship, you want somebody you want to be able to call and get good advice from 7 years down the line when you're deciding whether or not to redeploy your funds or not.
We take very much the same process to get to the point where they're investing. Initial phone call, really deciding if this is for you, and then showing guidance more than anything in every aspect of their decision, whether it be immigration attorney, whether it be project selection. And there's specialties within specialties, right? If there's international taxation issues, it's not that we are experts, we stay in our lane, but staying in our lane also allows us to know who are specialties, who specialize in certain aspects of these international taxation questions, right? Just because of our experience with EB-5 and prior investors, we know who to guide you to, because as you know, not all attorneys are great attorneys, not all brokers are great brokers. So our experiences really add value to that potential client.
To answer the question, does the relationship end after the investor makes their investment? Definitely not. I'm in touch with all my investors. They asked me questions recently. There was an instance where a project was about to redeploy, and they were asking me for my opinion on what to do. This is like 5 years after their investment has been made. So yeah, I don't think the relationship will be ending just after they make their investment. It's an ongoing, continuing relationship.
And I think we're all happy about that. I think we all enjoy talking to them, and all the questions that come, financially, obviously are very specific, but I think there's fun aspects of creating a friendship long-term. And that's something that I really enjoy about it.
Yeah.
When we're talking about doing due diligence on an investment specialist, is there any place where you can go to find out more about a broker?
Yeah, definitely. And I think best said, trust but verify. We all have links to brokercheck.org, which is a nonprofit that just lists all this information from FINRA. You can look into their history in terms of if there were any complaints. You can look into their history of being active license and what states they're actively marketing their products in.
So many of our members complain about the length and complexity of their private placement memorandums, which are those agreements that they sign at the very beginning. Do you help an investor when they're going through this, when they're reading through, and sort of point out things that they don't understand before they sign, or is it a little bit less involved than that?
Yes, the PPM, it's a very complex document. I mean, I've seen some PPMs. The smallest PPM I've seen is still 100 pages, and some of them go up to 250, 300 pages. And not to mention the business plan and the LLC operating agreement and so many other documents that the regional center dumps on the investor. But yeah, I mean, I go through the PPM diligently. It's definitely not a fun job, but it's interesting. I mean, especially when we go through many projects, different PPMs, and you start seeing the differences and the variations or the similarities in the terms for different aspects of the investment. So yeah, we do go through them very carefully and definitely point out some of the red flags or maybe some of the highlights that are beneficial to an investor. We go through that aspect of it very carefully.
And I think we've gotten to the point we've researched and read so many of these documents that I would say are probably in total at least 700, 800 pages for all the documents in the offering. But we've read them so much before you even read the title of who wrote it, you can pretty much tell what firm wrote the document. Like that's how much we're kind of involved with researching these PPMs.
Yeah.
Yeah, absolutely. And a lot of it's such boilerplate that if you read enough of these that, you know, you kind of skim them and then the differences really stand out.
Yeah.
And that's kind of what you need to focus on. You know, that's something that's been a change in EB-5, a positive change in EB-5 over the years, is a lot of the EB-5 offerings have become standardized, if not homogenized, because you know, everyone gets to read everyone else's. There's a limited number of people who put these together. On one hand, that does help the investor, but it also can lull the investor into a false sense of security that, oh, that it's all the same. And yeah, the ability to spot those material differences in the offering documents is very, 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 very important for the due diligence process.
Yeah, and I believe that, you know, helping investors like be able to conduct their own due diligence into their project even after they've invested, like looking through their PPM and being able to like say, okay, I know exactly what this is because I've spoken with Andrew, for example, you know. I think that's so important, and you don't see that as much as you probably should. So you're right, the ethics are changing and, you know, the standards are changing, and that's all for the better.
Yeah,
So
the guidance on the PPM does not end when they sign and invest and get their receipt notice, right? The guidance goes on a couple of years after when they're starting to figure out what date should I be planning to get my investment back. And they're kind of planning their future. So they come back to us to understand that date. So the questions really never end. And that's part of our ability to assist them long term.
yeah, that actually is a really great intro into our last question here, which is, you know, we've been seeing that the processing times for getting your immigration petitions approved are so long now. And so many investors are now running the risk for redeployment, where redeployment has become such a common practice. It's just expected by so many investors. So when investors are making their investment, what do you do to help them mitigate the risk of redeployment? Are there things that you bring up specifically for that repayment date, or?
One of the big risks of redeployment is the investor doesn't have much say in where his or her money is going to be redeployed into. So that's the biggest concern an investor has when they start looking at an EB-5 investment. So the way I look at it is, it goes back to the track record of the regional center, how they're done in their previous redeployments, how aggressive they have been or how conservative they have been with the redeployment of the investors' funds. Because as we all know, once the jobs are created in the first project, they don't really need to have the same level of risk if it can be avoided. I mean, so obviously we look at the track record in the redeployments. And that's where we get the first hint how a regional center is going to perform with future redeployments.
And I think a way to put some color on it is if we're sitting there doing months of research on project number one, and at the end of the day, the regional center is just investing in project number two and redeploying your money. You spent all this time and effort to protect your money for the first 7 years, but what happened with this next 4 or 5, whatever it may be. So I think that's important when we do some of the research on the redeployment.
Yeah, absolutely. And so that comes down to potentially, who is the offerer? Is it is the regional center also the developer? If they are, then you know what they're going to do with the redeployment. They're going to keep reinvesting it in their own projects, which by definition, they think their own projects are great. Maybe they are, maybe they aren't, but that will be the mindset going in. Or is the regional center basically fulfilling basically a lender? They're not the developer. They just do due diligence and lend money to projects. Presumably that group will do the same level of due diligence on redeployed projects that they did on the front end for the initial regional center project. So things like that, I think, are important to look at as well, because you have one group of people that are involved in EB-5 that redeployment is a pain for them. They never got into EB-5 to basically become someone's money manager for an open-ended period of time, because it increases their risk factors that they have to do this redeployment. But what if the project, and if they have to do it 2 or 3 times, that increases the probability that something could go wrong. However, there's other groups that love redeployment because it gives them, they can treat that as equity into their next project and their next project. So that raises the moral hazard risk as well. And so these are definite considerations. And in the PPM as well, it should spell out what level of control will the investor have or over future redeployments. That should be spelled out in the PPM as well. And it's definitely worthy of consideration.
Well, and I mean that's a big part of, I think, of the conversations about projects, and also understanding your particular investor and the likelihood that they will get delayed in the process, because there's a conflict in interest. On one hand, you do want the projects that are so good that there is a high chance that the developer will repay early, but then it does create this risk of redeployment. That's where the regional center themselves as an organization become extremely important, because larger regional centers that have multiple ongoing projects, they usually have more avenues to redeploy the funds in short-term, relatively safe options, where, for example, they're using the financing as short-term bridge loan for the next project. If you're working with a regional center that doesn't have a lot of ongoing projects, there could be an issue at the redeployment stage, because they may not have a lot of redeployment options, and those options may be longer term and they're not getting repaid as quickly. So that's one of the factors to definitely consider when you're looking at the project initially.
And I think not just voting rights on redeployment, but I think there's value between the data we receive from groups like AIIA in the number of applicants that are in the pending queue, right? So not only are we figuring out, okay, if you get redeployed, what happens, but we're figuring out how long could you be potentially retrogressed, and for how long would you be waiting to the point that are you going into the project number 2 or not? And I think that data that AIIA provides, as well as, between us and our network that we can kind of gather, is really important to figure out. Outside of that, there's groups like AIIA that do really progressive movements on the definition of at risk, and that definition and battles with courts and legislation or interpretation, I guess, is really important to figure out if you're going to be redeployed at all. Or if you are, what is that interpretation? I think the value that we bring is being at the forefront, understanding any laws and legislation and interpretations that come about.
Well, what a fantastic way to wrap up. I couldn't have thought of a better way to, do a sign off. But thank you guys so much for coming here and, giving really profound answers about what investors want to know about working with a broker dealer.
I certainly learned a lot conducting this interview, and I hope you learned something you didn't know also. To learn more about the EB-5 program, the EB-5 investment process, or what AIIA is doing in the political sphere, please visit our website at goaiia.org. Check out our blog, check out our resources. We have tons of resources for both prospective and current investors. We also post very regularly about what we're doing in the political sphere to fight for investors' rights. So with that, we'll see you later.